Hello, everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be talking about M1 Finance once again. So, I have been on the platform now for 1 month. I started on 8 January, created my wife's self managed Roth IRA, and it is now the 9th or 10th of February, so it has been exactly 1 month. Now, the last 2 weeks have been pretty hectic, causing the stock market to fall by more than 10%. But it did recover Friday. You can see the indexes here at the top. So this is underneath markets on the M1 Finance app. This show you your top daily gainers and losers. So some of my wife's portfolio, her winners were Praxar, Simon, WP Carey, and then her losers were Walmart, Blackstone, and Kimberly Clark. And then it kind of goes into take a look at the watch list. Now, as far as our pies go that I created for her, we created her Roth IRA, and when I initially created this, I set up the description. This is an amazing dividend portfolio of 15 dividend stocks, 7 with over 10 years of dividend growth, and 8 that are very strong growing dividend stocks that haven't paid exactly dividends for more than 10 years. And I said that the average yield when I created this Roth IRA 1 month ago was 3.25. Now, if we click on her Roth IRA, we can see that it's holding 15 stocks. The average expense ratio is 0%, and now the average dividend yield is 3.80. So, if we were to buy into this portfolio again, average in, we would be getting an average yield of 3.8% due to the market going down, and these stocks have dropped a little bit in price. So if I were to buy into this portfolio once again, or average in with my dividends or contributions, I would average in with a 3.8 average dividend yield. So you can see here the stocks that we currently have within the portfolio. We have some pharmaceuticals, some defense, some real estate investment trust, telecom, and a few others here. Some very strong brands. Again, 7 of them have paid dividends for more than 10 years, and 8 of them are just strong contenders for continued dividend increases. So over the last month, we have been paid out a dividend. So she was very excited to receive her very first dividend. It paid out $5.05. Now her portfolio has fallen by roughly 5%. And let's go ahead and cover that real quick. So over just the month that she's been on the platform, the portfolio has fell by 5.47%. So that is half of what the S&P 500 has fallen, which means that this portfolio is pretty strong in comparison to the index. We're trying to either beat or at least match the S&P 500 or while having a higher dividend yield. This portfolio was designed for that just by having some very strong blue chip companies that pay out dividends, and that's what it was created for. We're not worrying about the capital appreciation, loss, or gain because we don't plan on selling these stocks anytime soon. These are all 5, 10, 15 year old stocks that are going to be around in the next, couple years, at least the next 5 to 10 years, if not longer. Now, the thing that we're looking at is just capital appreciation or return. It is in the negative right now, meaning that it would be a great time to average in. One of my mistakes over the last month realizing is that when you fund your M1 Finance app or your M1 Finance portfolio, the money that you automatically deposit into the account gets automatically invested next day into whatever portfolio you currently are investing in. So I had 15 stocks already selected for her to invest in. When the money came in, it automatically bought those stocks at whatever price. Now, what I would suggest to all of you guys looking to start your very own M1 Finance portfolio is invest a minimum right off the bat. $500 is what you need to open up your very own Roth IRA. This is saving for your retirement. This is your future. So start your Roth IRA. It's self-managed because it's managed by you. You're not paying somebody a fee to manage it for you. You are doing this all for yourself. You can choose to invest in indexes such as the S&P 500, ticker symbol VOO, or you can invest in individual stocks that you believe will beat the indexes. So this is all for your future. Once you have invested your first $500 to get your Roth IRA or IRA started, I believe you guys should start your own Roth IRA because it's a tax sheltered account. all your dividends, your capital appreciation, your interest, it's 100% tax free after you have hit 59 and a half. So after my wife here hits 59 and a half, regardless of whether the stocks, if it's sitting at over 500,000 or a million in the next 10, 15 years, she's only 27 right now. So she has another 30 years or more, over 30 years until she hits retirement. So that's quite a while for this portfolio to just compound and build year over year. So again, start with $500. That's going to leave you with 5,000 remaining for the year. So if you put 5,000 and if you have X amount of weeks left. So we're in we're a month into 2018, so 54 or 52 minus 4 weeks. We're just going to say we have 45 more weeks remaining in the year. We would need to pay ourselves $111 for the remainder of the year, and then we would have our total $5,500 in the account. If we need to add a little bit towards the end of the year to make it that full $5,500, then so be it. But you are paying yourself. Think of this as a bill for a vehicle, an investment vehicle for your future. Instead of paying for whatever kind of car you have, that $300 or $400 car that you have sitting in your garage, you're paying $100 towards your retirement. That'll benefit you in the future, and that's a great thing. So one thing we didn't cover was the dividends. So one thing that you should know is that if you get paid dividends within your portfolio, my wife was paid out $5.05 from AT&T, but it does not invest automatically unless you meet the threshold of $10. So that's why I go back to start your portfolio with $500, set up, do your estimate. How many weeks are remaining in the year? You could just Google. Let's go to Google. How many weeks are remaining in 2018? So this will tell us, okay, you'd have to do a little bit more research there, but however many more weeks are going into 2018, you take the $5,000 remaining and you divide it by the number of weeks. Then you set your schedule, you set it up so that you deposit $111 that you're investing in yourself and for your future. And then every single week it captures the dividends from the prior week or the week that you were paid out, plus your new scheduled allotment that's over $10, and that's invested in your portfolio for your future. So everything is working week after week. You're compounding your dividends, you're compounding your scheduled allotments, and you're paying yourself for your future. So think of it just like a bill or an investment vehicle that you're buying month over month. You're depositing $400 for your future. So that is it for this video. I hope you guys have enjoyed it. As you can see, it's a great platform. I've talked about this in my other videos. It's 100% free to invest on the platform. It's free trades, partial shares, no fees. You're managing it yourself. I've created my wife's Roth IRA over here, and I also have her individual account, which I just started with $100 and just tracking the S&P 500. You can see that I bought in at this position at a very low point. I said, you know what? It takes roughly about a day or two for the funds to transfer in. I believe the market's going to continue to have a little bit of downside. I deposited $100 into the S&P 500, and I bought it where I'm only down 0.15%. That means there's a lot more gain. There's more room to gain than there's room to lose in the way that the future, the way that I'm able to predict the future, or just kind of see the future falling out forward, I suppose. But if you guys would like to start your very own account over at M1 Finance, there is a referral link in the description below. If you sign up through the link, you and I would both get $10 deposited into your cash managed account after you have deposited your first $100. That is the minimum requirement for your cash managed account. So you put $100 into your cash managed account, you leave that there, you get $10 for free from the referral. Then you start your self-managed Roth IRA, deposit your $500, and then come up with how many weeks are remaining in the year, set up a schedule, and pay yourself every single week for the future. And this is going to help out your retirement. This is going to help average in those dividends and your allotments week after week, and it's going to compound. And if you have 20, 30 years left into retirement, you can see your account sitting at nearly $500,000 to $1 million in the next few years. So this is a great platform. It's going to be inside of our inside of a Roth IRA is the primary one that I'm focusing on funding for the future. So next year, the very first thing I'm going to do, 52 weeks divided by $5,500, that's going to give me about $106, $107. I'm going to set up a schedule to pay herself $107 every single week. That way she's able to average in week over week regardless of how the markets are doing, and over the year she'll have her $5,500 deposit into her account, plus it'll be averaged in throughout the year, meaning that, if there are downturns that take place in the market, if the market gets it gets too high, she'll be able to buy in averaging points, which will, the return for averaging in is much better usually than just buying if I put in my full $5,500, you can see that the market was not very kind, and we're down 5.47%, whereas if we had averaged in over the last 6 weeks, we may be positive or negative by much less or a little bit higher in the average returns. So again, that is it for this video. If you would like to set up with M1, if you would like to sign up with M1 Finance, check out the referral link in the description below, and also I will have it linked in the comment section to check it out. Again, invest either $100 into your cash managed account or $500 into your Roth IRA, and then set up your schedule to pay yourself, because this is your investment vehicle for the future. So that is it for this video. If you have any questions about M1 Finance, Robinhood, Merrill Edge, I use all platforms, as you know. And of course, as a friendly disclaimer, I am not a financial advisor or tax professional. The information provided is my opinion for entertainment and fun. This is not investment advice. This is just me as a financial investor trying to help others make their money work for them. If you have enjoyed the video, hit the like button. Remember to subscribe for future financial videos. Thanks for tuning in. I will see you next time. Have a great day. Bye.